Hello, hi guys. So welcome back to weekly analysis. As always, I will do a multi-time frame analysis on everyone's favorite pair, which is gold, or also known as XAU USD. All right. So this is the analysis, but then I will explain all the way from monthly again, just so you guys can have better understanding. So let's go to monthly time frame. All right, so now we have dropped down to monthly time frame. Let me erase this watermark first. All right, so now we are on the monthly time frame, and as you guys can see, we still have a couple of days to go for this particular monthly candle to close down. All right, so today Monday, and then tomorrow Tuesday, once the market closed, then we will have a closing of a monthly candle. All right, and then now according to the structure, the only thing that we can acknowledge on monthly time frame is that this level has been broken by the price to the upside. Okay, why do I take this level? This level is the level that is quite significant over here on a monthly time frame. Why do I say that? Okay, so over here, as you guys can see, previously it was reacting as a resistant, 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 resistant so many times, and then when finally gold made an all-time high this year, okay, price broke this particular resistance range and then retested it as support over here. So here we have a resistance, 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 price broke and then reacted as a support and then price pushed up. Okay, last month it was fully impulse to the upside, okay, according to monthly. And then this month also overall is bullish. All right, but we still don't know how this monthly candle going to close because anything could happen in couple of days. All right, so now that's the only thing we need to acknowledge here. Now we will drop down to weekly time frame. All right, now we have come down to weekly time frame. Let me erase this monthly zone. Okay, all right, so on weekly time frame we can see that last 3 weeks, okay, over here, last 3 weeks price been moving within this range only, which is first one is this range. Let me do it with dotted line, and second one is here. Okay, last 3 week price just been moving within this two line. Okay, you guys can see this was last week's candle. This one just started this week. Okay, and this one was previous week, and this one was the week before that. Okay, so this is the 3 weeks candle. So we don't know how this week candle going to close, but another thing that you guys can measure is on weekly time frame. For those who use Fibonacci, what you guys can do is, if you guys want to measure the retracement percentage, so what you guys can do is you guys can drag the Fibo on this last impulsive leg on weekly time frame. So when you guys do that, you guys will notice that price sort of retested the two significant Fibo level, which is 38.2 and also 50%. All right, and 61.8 is not touched yet. All right, okay, so that's that, and then nothing much, nothing else on weekly. Now we will drop to daily time frame. All right, so when we come to daily time frame, we can the main thing you guys need to notice is that price made a really impulsive move over here on last Monday, and then after that impulsive move, the following day, Tuesday, price went and retested this particular demand over here, and that's the demand that been holding the price from going even further down. And this demand also could be the last stop before the price fly high again. So we don't know that. Okay, we still need to monitor that. And then now I will erase this particular Fibo. Okay, that's just for extra information. All right, and then on daily, one more thing that we can notice is that price also made another supply zone. Okay, for those who learn engulfing, this is a bearish engulfing zone. All right, okay, and then over here we can also drag a Fibo by measure this impulse. Okay, so this impulse over here, wait, let me adjust this. Okay, this impulsive move over here. And then one more thing you guys need to acknowledge is that over here, when the impulse was made last Monday, okay, price actually broke through these three significant support. All right, so we will also draw all that line. Okay, over here one and over here one. Okay, so this is a three support that the price broke when the bearish impulsive happened during last Monday. All right, and then so I will label the zone for you guys so that you guys can have a better understanding. So this one is daily demand. Okay, daily demand over here, and then this line I will delete so that we can have a clearer chart. Okay, daily demand. All right, okay, and then this one is daily bearish engulfing. All right, okay, so let me adjust that, put it in. Okay, so now on the Fibo that I dragged on this particular impulse, right? Okay, we can notice that price has retested the 38.2 and almost retested the 50% range as well. Okay, but then this one we will go lower time frame such as H4 to see more structural movement from gold. All right, so these are the things that we can notice on daily time frame. Now we move to H4. Okay, so when we come to H4, H4, what do you guys notice? You guys can notice is that near the 50%, we can also notice that there is a high liquidity zone over here. Okay, this 50%, so I will draw that, and then I'll change color to maybe green. Okay, and then over here on the 38.2%, we also have a high liquidity zone. Okay, so we will draw that as well over here, and I will explain to you guys what is high liquidity zone and how do you can see it. Okay, I will put this color, and then I'll delete this line and this line and also this line. All right, so these are the zones that we have identified throughout the multi-time frame analysis. Okay, so let me adjust the zones. Okay, so what is high liquidity zone and how you can identify it is actually really simple. High liquidity zone, wait, let me label it first. HLZ, okay, we just label it in a short form. So we have two high liquidity zones, so I will put it here and I will also put one here. Okay, so high liquidity zone is a range of price. Okay, it's a price range where the both parties, which is sellers and buyers, were interested. All right, okay, so over here, wait, let me drag this. Wait, where do I? Okay, so let me drag this. You guys can draw until here also, but I will take until here. Okay, doesn't matter. Okay, so this range you guys can see previously it was reacting as a resistance, and then when price broke above it was reacting as a support, support, and when price break below again it was reacting as a resistance, and again when price break back above it reacted as a support. So as long as price is trending above here without breaking down, this level will still react as a support. Like I said, unless it break below, then yes, the function of this high liquidity zone will change back to resistance. Same goes to this zone. Okay, previously it was a resistant. Okay, here price break above and break back below. Again, it become resistant. And again, price break above, it becomes support, and after price break below, it's not yet retested. Okay, so that zone also we will take into account, and now I will erase this. So these are the zones that I will be monitoring. Like I said, the what I'm gonna expect from price is actually really simple. And one more thing is we can also see a supply zone over here. So I will mark that as well. This is supply zone and also initial breakout point. Okay. Wait. Let me. Oh my god. Why I can't move this? Huh? Please. Okay, so now here we have this, and then over here I will label this as H4 supply. Okay, and then two more things we can have confluence is, one is we can draw one trend line like this. Okay, and then we can also draw one trend line over here. Okay, so this trend line, usually trend line is very easy to draw. You just need to connect two highs or two lows in order for you to get a trend line. Okay, so here we have one high and another high here. So let's say if the price moves up, here we also, this particular zone, this red zone, we will have extra confluence. Same goes to this one, this blue zone. Okay, over here we will also have a confluence of a trend line. Okay, you can also draw extra trend line if you want, like this, connecting this and this low. Okay, it all depends how you want to do it. Like I said, trend line, I only suggest you to use it as a extra tool. All right, okay, so here how I got this trend line is actually really simple. I connected this low and also this low. Okay, so now what do I expect how the price will be moving? It's actually really simple, and I will also take this. Okay, I need to draw this. Wait, hold on, this level. Okay, because this is the level that will validate the sell later on, which I will be explaining shortly. Okay, over here, let's say now price is coming back to this particular, currently reacting as a support zone. Okay, so let's say price make a shift to the bullish on a lower time frame such as H1 and below, then I will focus on buy and expecting price next checkpoint will be this 50% high liquidity zone. All right, okay, so that will be the first one. And let's say after that the bullish strength continues, okay, then we can expect the price to break above and then make a pullback like this, and then go and retest the daily demand, or in fact even the H4 supply, which is inside that daily bearish engulfing, sorry, not daily demand, daily supply. Okay, which is the daily bearish engulfing. Okay, so this is for bullish. For bearish, okay, what you guys need to acknowledge is that price, let's say price needs to break this trend line and also this particular engulfing over here. Here we have an engulfing and support zone. So if let's say price break below and then make a correction like this, corrective move, impulse into a corrective move, then only I will be considering sell. Okay, or else it will be risky because there is a lot of demands here and also engulfing zone. Okay, so it must make a impulsive move into a correction, which is usually a zigzag or whatever flag pattern you can monitor. That indicates usually the zigzag and the flag pattern that will indicate a low momentum in opposite move. Okay, so that's why we needed that. Okay, it's not just a simple correction or whatsoever. Okay, usually the zigzag move will clear off all the demands or the supply. That's why we can expect another impulse move afterwards if the price does that. Okay, and after that, let's say price breaks again this zone. Okay, then we can expect it to go even lower to this particular, oh my god, wait, to this particular level. Okay, so this one I will put it in this color. Okay, all right, so this is what I'm looking at. And like I said, we have to monitor first in order to get into the best trade possible, which I will be updating you guys in my channel. So don't forget to click my link in the bio and also subscribe to the YouTube. I have all the links linked up in my bio so you guys can check it out, and I will see you guys in the channel. All right, thank you guys.